Hello, I'm Chris Sarley, investment research analyst at Fund Caliber, and today I'm delighted to be joined by Richard Parfect, fund manager on the Elite Radar VT Momentum Diversified Income Fund. Richard, once again, thank you for joining us today.
You're welcome.
Okay. We talked a bit about equities, we've done a bit on fixed income. We did touch on alternatives, but I want to sort of focus on them a little bit more now. We touched on them through the specialist trusts you mentioned a little earlier. Obviously, there was a strong period where this part of the portfolio was integral to meeting those income targets during QE, etc. Maybe less so now. Maybe we could just talk about that bucket of the portfolio in a bit more detail, what it looks like. Have you had a few sort of recent wins that have done quite well? And, by the same token, is there an element of similarity to bonds in that you're also being paid quite well to wait in certain parts of that market as well?
Yeah, we're certainly being well paid to wait, and we're now starting to see increasing amounts of corporate activity in those sort of alternative income space. What do I mean by that? Well, it is now probably the exception that for managers to not be buying or boards to not be buying back stock. Share buybacks are de rigueur now. We're starting to see M&A, strong. The strong eat the weak. London Metric has been very active in buying sort of smaller, less well managed or less well positioned REITs. Darwinism is really starting to come to the fore now, and that's to be welcomed, and it means that we're starting to see. Well, we've had wins within the income fund. We did hold RHM music royalties and Hypnosis songs fund. Both of those got taken out by M&A at significant premiums to the prevailing share price at the time. Distressed share prices, or at least share prices that imply distress, are often being proved to be incorrect, the wrong price. And unfortunately, for the longer term, it means that some decent assets or interesting areas of assets are being taken out by private investors. But there is the benefit clearly for the short-term sort of value rediscovery. More recently as well, we've had good outcomes from our holding in DNA2, Dorrit Nimrod Air 2, which is aircraft leasing. We've held that since it was launched, basically. Got very oversold, and we always had strong faith in the underlying asset, the A380, and the lessor, Emirates. And as we expected, Emirates has bought the remaining 5 aircraft in DNA2 at a higher price still from what they paid in previous years for earlier aircraft. And that's been a very high yielding vehicle for us, which has been great. But it's also delivered significant capital returns as well, given where we were buying it quite aggressively in COVID. And we also own DNA3, which is a sort of a younger version, and so that's been a good outcome. And the market mispriced that asset all the way through. It always got it wrong.
Just quickly before we move on, obviously it's a huge sort of toolbox in terms of those alternatives. You've got all sorts of asset classes, infrastructure. You mentioned private equity, a few others. Maybe just give us a quick line on REITs, because there's been quite a bit of talk about them recently. Are you seeing quite a lot of opportunities in that space?
Yeah, there's opportunities. There's opportunities and frustrations. It's probably fair to say. We own the constituents that we own don't change very often. So, for example, AEW UK REIT, we've held since IPO, continues to be excellently managed. High level of income. Actually, the shares are trading at quite a narrow discount now. I think they're quite popular amongst the retail investor community, and with good reason. Yeah, that's a strong, stable member of our portfolio. London Metric as well. Very, as I said earlier, very active in M&A space. Very strong management team, strong logistics thesis there to their assets. We hold PRS REITs, which you've probably seen. Well, I expect you've seen the the shenanigans that have gone on. We supported that shareholder action. We'd already told the company, the manager, that we were intending to vote against the chairman at the next AGM for reasons that won't be unfamiliar for what's been said publicly. So we were happy to support that action, and it's good to see sort of resolution. We like the manager, we like the assets. We just felt there's some improvements that could and should be taken. We weren't particularly happy with the way that the contract had been extended as well. So, but those shares they'd been sort of trading too cheap, and they've been rising in recent weeks. Well, so that's been good to see. Probably the most frustrating thing in the portfolio is be disingenuous for me to suggest otherwise. We hold life science REIT, so those shares are trading at significant discount, about a 58% discount to net asset value. It's the REIT is too small, and it's been a bit slow in terms of getting some of the leases signed on the development assets at Oxford. We still think the thesis for demand for lab space is strong. We don't think that's going away. But the REIT has certainly struggled from a market perception perspective, and I would expect, well, I wouldn't be surprised if action is taken in some way to address that, either by the manager themselves or by third parties. We're seeing this happen in the space, and it's a fairly well-known trust, so it wouldn't be surprised.
On that note, Richard, thank you very much once again for joining us today.
No worries. Thanks, Chris.
No problem. And if you'd like to learn more about the VT Momentum Diversified Income Fund, please visit fundcalibre.com.